Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 30th, 2025, and we're diving into Starbucks' latest earnings report for Q4 and the full fiscal year 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Starbucks has been a focal point in the market, especially with their Back to Starbucks strategy. I'm excited to discuss their performance and future outlook.
Revenue and profitability overview. Let's start with the top line. Starbucks reported a consolidated net revenue of $9.6 billion for Q4, marking a 5% increase year over year. However, the GAAP EPS was due 2 cents, and the adjusted EPS came in at 52 cents. John, how does this compare to market expectations?
Well, the adjusted EPS of 52 cents fell short of the forecasted 55 cents, which was based on a survey of 9 analysts. Despite the revenue growth, the earnings were impacted by restructuring costs and other operational challenges. The GAAP EPS saw a significant decline due to these factors.
Operational efficiencies and future outlook. Starbucks' operating margin contracted significantly. Can you elaborate on the operational challenges they faced and their future strategy?
Absolutely. The non-GAAP operating margin contracted by 500 basis points to 9.4%. This was largely due to restructuring costs, including the closure of 107 stores. The Back to Starbucks strategy is aimed at revitalizing their store portfolio and improving operational efficiencies. It's a multi-year turnaround plan that focuses on sustainable growth.
Segment performance analysis. Let's break down the segment performance. How did Starbucks fare across its different segments?
In North America, revenue increased by 3% to $6.9 billion, but operating income saw a sharp decline due to restructuring costs. Internationally, revenue grew by 9%, driven by new store openings and increased transactions. The Channel Development segment also saw a 17% increase in revenue, primarily due to the Global Coffee Alliance.
CEO and CFO insights. What insights did the leadership provide regarding Starbucks' performance and future prospects?
CEO Brian Niccol expressed confidence in the turnaround strategy, highlighting the return to global comp growth. CFO Kathy Smith emphasized the focus on driving top-line growth while managing costs. They also announced a dividend of 62 cents per share, reflecting their commitment to shareholder value.
Key takeaways. In summary, Starbucks is navigating through a challenging restructuring phase with a focus on long-term growth. Despite missing the EPS forecast, their strategic initiatives are aimed at building a stronger foundation. Thank you for joining us, John.
Thank you. It's an interesting time for Starbucks, and their strategic moves will be crucial in the coming quarters.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on Starbucks' performance. See you next time.